Hey everyone, welcome back. So we started our second quarter. Obviously, this is April. NFP, something that the market has been expecting. Just a quick sound check. Let me know if everything is all right, and then we can get started. All right, let me know if the audio is coming through okay. You can hear me fine, and then we can get started. Seems to be okay from my side, but if there's any audio issues, do let me know. All right. Hey everyone, thanks for joining in. And let's get started with news trading session number 1. It's non-farm payroll. My name is Vidya Jodo. We'll get started as soon as we can with the disclaimer first. Any opinion discussed in this webinar or linked to this presentation is provided as a general market commentary and does not constitute investment advice. News trading involves risk due to high volatility, and I do expect a little bit of an extreme volatility today. Market reaction to news can be swift and unpredictable, which leads to higher trading risk and delays in order execution, so be very careful and be attentive when determining the volume of your transactions and consider all possible risk factors. Okay, so you guys probably saw what happened in the market yesterday. A lot of factors happened. Obviously, we will take a look at oil as well. I think it's within range for a potential breakout as well tonight. Okay, there are going to be bonuses for participants. I'll be sharing the code soon with you guys, and then you should have access to the private Telegram channel. If you sign up through email or if you have attended this previously, you should already have access to the Telegram channel, by the way. All right, so a little bit about myself before we get started. My name is Vidya Jodo, and I've been a full-time trader with over 20 years of experience as full-time. Professional trading coach and technical analyst since 2007. I am personally an expert in Ichimoku Kinko Hyo technique, which is a Japanese charting techniques. I'm also a director of Zenefix, an independent market consulting company. I've been a guest speaker at Trading Investing Expo across Australia, Invest Fair in Singapore, as well as the Australian Technical Analysts Association and the Australian Professional Technical Analysts Conferences. All right, hello, hello, hello. All right, so we are going to go through some theories. I'll go through as soon as we can because I do want to set up some of the positions that we want to have, as well as on the rules on how to trade the NFP itself, because it's a little bit unique. So we'll get started with the promo code that you can use. It's Nonfarm 2024. You can use this. It's valid until the 31st of December 2024. So make sure you are using this code when depositing into your Octa trading accounts to get your double deposit bonus, or basically 100% deposit bonus. Okay, so the code again, it's Nonfarm 2024. All right, cool. You got that? You can save it. You can use it anytime you want. All right, so let's talk about who the Bureau of Labor Statistics is. So the Bureau of Labor Statistics is a federal agency that collects and disseminates various data about the U.S. economy as well as the labor market. And it also reports the CPI as well as the PPI, which will be released next week on Wednesday. Obviously, both are considered important measures of inflation, and we're still on the topic of inflation and how the central bank is going to act on those inflation levels, okay? Now, within the labor market data, the most interesting aspects are obviously the number of people employed outside of agriculture, and this is non-farm, non-farming, pretty obvious, payrolls, okay, as well as the unemployment rate. There's going to be a little bit of a difference here, just to make sure that everyone's on the same page. Non-farm payroll, it's basically the payroll list of how many people are actually employed and getting paid. The unemployment rate is the opposite. If the unemployment rate goes up, it is not good for the economy. So what you want to see for the economy to actually be good or the labor market to be strong, you want the NFP number to be high and you want the unemployment rate to be low. All right, so these two data are going to be the opposite. All right, so at the beginning of every year, the agency or the BLS publishes a calendar with the release date for the entire year. So it's kind of impossible for us to miss the NFP because it's scheduled at the beginning of the year, okay? Unemployment data is also published every first Friday of the month, but if it falls on a holiday, the publication is usually postponed to the following week and occasionally to the Thursday of that week. Very rare that we move to the Thursday. But typically in March, we get the NFP numbers on the second week just because February is a shorter month. All right. Inflation data, or the CPI, is typically published on the following Wednesday after the labor market data is released. Can be Tuesday, can be Wednesday. For next week, it's actually going to be Wednesday for the CPI numbers, okay? Okay, so let's talk about the NFP numbers. And the NFP is basically a report that's released monthly by the BLS that measures the number of jobs added or lost in the US economy, excluding farm-related jobs, private household employment, and non-profit organizations. So office workers, I guess it will be in there. If you work in as a barista, I would guess if you work at Starbucks, you will be included in part of the NFP numbers. So market analysts and investors usually look for the NFP figures above 200,000 as it is seen as a positive sign of a healthy job market and growing economy. However, the interpretation of the NFP data can vary depending on different economic factors and the context it is released in. I'll talk more about the context later on once we go through some of this stuff. All right. NFP data is a crucial indicator of the state of the US labor market and can significantly impact financial markets. A figure that falls below market expectations may be viewed negatively, while one that exceeds expectation may be viewed positively. So NFP figures are definitely closely watched by traders and investors, particularly in the forex market, where currency pairs like the EURUSD, dollar yen, dollar Canadian, dollar Swiss, pound USD, Aussie USD tend to exhibit high volatility in response to the report release. In fact, anything that's USD related will have an impact from the US NFP numbers. What about currency crosses? For example, the Euro Pound, the Euro Swiss, the Euro Yen, they have more or less a secondary impact into it. So it won't be impacted directly by the data itself, but it will be impacted on whichever currency is actually going to be stronger. That will send the movement on the currency cross, all right? So sometimes if we look at the currency cross, it might not actually move. For example, if the euro and the pound gains against the US dollar, sometimes the euro pound might actually just be flat. So just keep that in mind if you are going to be trading tonight. All right, so again, the release date is a special time for many traders who have learned to successfully use special non-farm strategies, which is something that we are going to talk about tonight. So after the release, there are strong changes in quotations and even trend reversals, and typically algorithms or technical analysis stop working temporarily during news releases. Once it gets back to normal, feel free to go back to your usual technical analysis, but during the release, we need to have a special trading strategy to handle it, okay? So according to the BLS, non-farm employee classifications account for approximately 80% of the US business sectors, contributing to the GDP. Therefore, if we see an increase in the NFP numbers, then it's common sense that we are looking at an expanding economy. We do expect the GDP numbers to go up as well, okay? Again, the best assets for non-farm tradings are the EURUSD, dollar Japanese yen, dollar Swiss, Aussie USD, New Zealand USD, dollar Canadian, pound USD. Those are the currencies that will be affected immediately. For commodities, obviously, you could take a look at gold as well. This one does get affected significantly, so expect a lot of volatility, especially with gold, you know, with the condition right now at all-time highs. So yeah, very high volatility, and that's to be expected for today as well, because we saw a huge volatility that happened in the market overnight. If you were trading last night, you would have seen a sudden drop in the market. We actually have a huge drop in the stock market. There's basically a risk of sentiment that goes on overnight, and partly because of the geopolitical tensions that kind of starting to heat up again in the Gaza Strip. Obviously, Iran is coming into the picture right now, and I think what happened overnight was market was a little bit jittery on the news that Israel is potentially preparing to defend themselves from Iran because of their attacks first. So yeah, it's kind of unverified news, so you probably wouldn't read this in any financial papers, I guess, today. And the other factors is obviously with the FOMC, and the FOMC is basically talking about potentially not even cutting rates this year. Just a reminder, we will talk more about this next week during the inflation numbers, but FOMC is expected to cut rates by 3 times in 2024. That might change depending on the inflation numbers this month and next month. The decision would probably come in June as well. Okay. All right, so the other one we need to talk about is the unemployment rate. So what is the unemployment rate? The unemployment rate is calculated in percentage, and it is published at the same time as the NFP numbers. So we're looking at, I'll be honest, tonight we're actually going to be focusing on these 2 numbers, the NFP numbers and the unemployment rate, but there's actually a third number, which is the average hourly earnings. Okay, so for now, we also need to understand the unemployment rate. The unemployment rate represents the proportion of the labor force that is currently not employed, but it's capable of being employed. The survey itself, it's basically just done on approximately 60,000 households across the US. So I don't think it's a good representation, I'll just be honest with you. The NFP number is probably a much better representation, but again, we will need to take some samplings, and therefore the unemployment rate does carry a lot of weights behind it as well. All right. So according to the US Bureau of Labor Statistics, for an individual to be classified as unemployed, they must meet the following criteria. They must be without a job, obvious. They must have actively looked for a job in the past 4 weeks. They must be available to start a job if offered one. Now, if you take a look at the 3 criteria, therefore, this sampling is taken from people that has claimed their unemployment benefits, okay? And we actually get weekly unemployment claims that's released every Thursday. We just got one last night. It was a little bit harder than what the market is expecting. So we can kind of estimate whether or not the unemployment rate is actually going to be good or bad or about the same just by calculating the weekly unemployment rate, okay? So that's a little bit of a hinter. Because if a person doesn't meet the criteria, they are not considered unemployed for the purpose of calculating the unemployment rate, okay? So basically, anyone that took the unemployment benefits could be part of the survey done in the United States. All right. The third set of data is the average hourly earnings. The US average hourly earnings data is a report released monthly by the BLS as well, alongside the unemployment rate as well as the NFP. It measures the average hourly earnings of workers in the US economy. The data is collected through surveys of businesses across various industries and encompasses both full-time and part-time employees, including overtime earnings. Economists, investors, and traders closely monitor this report, as it can offer valuable insights into the state of the US economy and its potential impact on inflation. So the logic behind this is that if people are getting paid a lot more, they are likely going to spend a lot more as well, and that could actually drive inflation up. Okay, so this is why when we talk about inflation in an economy, we kind of need to focus on how much they get paid. Does their base salary go up this month compared to the previous month? Do they get paid more? If they do get paid a lot more, obviously that could drive inflation higher in the next few months if it's a consistent increase, okay? All right. So when trading based on the US average hourly earnings data, traders often scrutinize changes in the wage growth rate compared to the previous month, as it can signal shifts in the labor market and potential inflationary pressures. Okay? All right. Higher than expected wage growth may indicate potential inflationary pressures, which can result in higher interest rates and currency appreciation. Obviously, conversely, a lower than expected wage growth may indicate weaker inflationary pressures, which may lead to lower interest rates and currency depreciation. Now, as with any economic report, it's important to consider the broader economic context and other indicators when trading based on the US average hourly earnings data. So we're looking at the inflation that's coming off. Logically, we really want to see the average hourly earnings remain the same from the previous month, or at least drop down a little bit. If it kind of drops down, then it will send signal that the inflation might be cooling off, and all of these 3 factors is actually very important to the FOMC's decision. Even though the FOMC said, doesn't matter what the labor market is, we will probably not base our rate cut decision based on the labor market, but it does still play an effect onto the consumer sentiment or how we trade as well. Okay, so right now for tonight, average hourly earnings month on month is expected to kind of go up a little bit from 0.1 to 0.3%. I'll share the data soon. Okay, but before we begin, there are obviously some trading strategies. We have time, don't worry about it. We can set up our position in the next 5 minutes. Let me just go through some of the trading strategies. You can trade the NFP numbers pre-NFP. So a potential strategy is to trade the market's anticipation of the NFP data release. This approach involves opening position in the days leading up to the NFP release with the expectation that the market will begin pricing in the anticipated NFP outcome. So you will need to close your positions before the actual NFP release to avoid extreme volatility that can follow. So if you open a position, for example, on Tuesday, you would probably start closing your positions last night or maybe about now before the NFP release. So some traders do avoid the NFP release, but we are going to be doing our live trade on the NFP. So we're not avoiding it, we're embracing it. So we will focus more on the Stradle strategy. So this one involves placing 2 pending orders, which is a buy stop and a sell stop. The theory is coming soon on Monday. So if you are new here and you want to learn more about the the pending orders that we have and how do you actually use them during news release, please join me on Monday. At the same time, we are actually going to be covering the news trading theories on Monday. Okay, so yeah. You can create 2 pending orders, a buy stop and a sell stop above and below the current market price just before the NFP release. This way you can potentially profit from a strong price movement in either direction. And once one of the orders is triggered, immediately cancel the other order to avoid being exposed to further market fluctuations. Because if you don't close your positions and there are whipsaws, and last month we experienced those whipsaws during the NFP and the CPI, it causes a little bit of a problem. We did recoup some of the losses during the NFP last month, but with what happens in the market, we got whipsawed, and I think some of the orders were actually triggered in terms of the buy stop and sell stop. So you're kind of locking in your losses. You're not really locking in your profits. So once your order is triggered, make sure you immediately close the other order to avoid both orders being triggered. Okay, all right. If you don't want to trade during news release, you can also do it after the NFP, and there are 2 methods to do that. We can fade the initial move, and this is something that we actually did last month. So this strategy involves waiting for the NFP release and then observing the initial market reaction. And once the initial volatility subsides, you want to be looking for opportunities to trade against the initial move, because the approach is based on the idea that the market often overreacts to the NFP data, and that a retracement or reversal is likely to follow in the short term. Okay, so you can do that with the fade. We'll see if we can do the fade tonight. Hopefully we don't need to do the fade, because I'll be honest with you, the fade, it is actually a much riskier strategy. Okay, we really need to be able to understand the data. So don't try to attempt the fade if you don't understand how to use your technical analysis or how to read the fundamental analysis. Okay, news trading is not fundamental analysis. It's a completely different thing. The other thing would be post-NFP trading. So instead of trading during the release, you can wait for the market to digest the NFP data and then look for trading opportunities, a couple of hours or maybe days following the release. This strategy allows you to avoid heightened volatility during the release and focus on longer term trends that may emerge as a result of the NFP data. So for me, as a swing trader, for my swing positions, I would actually wait until Monday. Once the Asian session kicks in, then that's when we have enough time. We got over the weekend to kind of digest what's the data, what's the breakdown of the employment numbers, who is unemployed, and whatever not. Okay, so we can actually look at a breakdown of the numbers. So it's a little bit more in depth, but it'll give you, kind of a relaxed state, I guess. You're not in that rush to open a position during the volatility, but it's all up to you. You have 2 choices. You can do this after the NFP release. So you can go with the straddle that we are going to do right now, or you can wait and see, after the NFP release, what's the market reaction, okay? So regardless of the strategy you choose, you have to keep the following tips in mind. Manage your risk, always use appropriate stop loss orders, and never risk more than a small percentage of your trading capital on a single trade, especially during high volatility. Sometimes you don't get your order filled in because liquidity tends to dry up, your spread could widen, you might get slippage in the market. Sometimes, you know, depending on how quick the market moves, it might actually fill your order at a different price. Okay, so just keep that in mind. Stay informed. Keep track of economic news, forecasts, market sentiments leading up to the NFP release to make better informed decisions, which is something that we're going to share next. Be flexible. Be prepared to adapt your strategy based on the actual NFP data and the market's reaction to it. So you got to be quick in terms of making a decision whether you are actually in the right or in the wrong. Okay. All right. So I'm going to go through the data. We have about a couple of minutes to talk about. So the NFP numbers previously is at 275,000. The consensus is at 200,000. So it's kind of borderline, right? We mentioned 200,000. So it's really borderline. If we get a number that's above 200,000, that will be good. Even though it might actually be lower than last month. For example, we get 230, 250. It will still be a good number because it's above 200,000. Okay. Now, the other thing is to look out for is obviously last month's revision. What if last month's revision, you know, we have the number at 275, it was revised down, or if it was revised up, we need to take a look at that revision and compare it to the initial release. And this is what causes the whipsaw to happen usually. Now, the unemployment rate is expected to be stable at 3.9%. Right. Again, we're going to be looking for revisions. Maybe last month was a little bit too high because it jumped up from 3.7 to 3.9. Maybe it could be revised down to 3.8. Right. But if the number comes in above 3.9, if it hits 4%, that's not going to be good for the US economy. That could actually weaken the US dollar. So we'll see what happens here. I think the bigger factor that's going to play out tonight is actually the unemployment rate instead of the NFP numbers. If the NFP number comes up above 200,000, everyone's just going to focus their attention to the unemployment rate. So we really want to see the unemployment rate drop down below 3.9%. But if it does come up above 3.9%, for example, at 4% or maybe even higher, that's not going to be good for the US dollar. Okay, so you could expect the euro, the pound, and whatever not to gain. All right. Average hourly earnings month on month expected to kind of grow a little bit from 0.1% to 0.3%, but the yearly number is expected to drop from 4.3% to 4.1%. All right. Fate is really dicey. Yeah. It's a little bit risky because you have to think about this. You are actually countering whatever the market is, unless you have a specific order. You know, you typically want to use the limit order for the fates anyway. So if there's a strong resistance, then yeah, we could actually fade it. All right, time to set up our trades right now. Do we have a little bit of a range? It's borderlining. We are about 5 minutes into the market. So let's start with the EURUSD first. All right, if you don't know what it is, you can actually right click and you can go trading. You can actually create a buy stop. So you want to have a buy stop a little bit higher. This is already pushing a little bit higher. I'm not going to place it here. It's too close. It's just going to get triggered. I actually want to push it a little bit higher at 1.0855, just slightly higher. I don't mind losing 5 pips, you know, instead of getting whipsaw by the market. But in terms of the sell stop, I think it's pretty okay if we have it close to 1.0825. That would actually be an okay price. So we're looking at about 25 pips of range on the EURUSD. Let's be quick. So 1.0850 for your buy stop, 1.0825 for your sell stop on the EURUSD. Okay. For the pound USD, you can take a look at this one here. The buy stop, we're actually going to be referring this on the previous swing that we have here. That's about 1.2650. Again, I don't mind risking an extra 5 pips rather than getting whipsawed. So yeah, 1.2655 for your buy stop. For the sell stop, you can have it about 1.2625. So again, very similar range, just about 25 pips on the pound USD. So exactly the same range as the Euro USD as well. Just about 25 pips difference between the buy stop and the sell stop. So Euro USD buy stop at 1.0855, sell stop at 1.0825. On the pound USD, 1.2655 for the buy stop, 1.2625 for the sell stop. The dollar Japanese yen is a little bit risky. I wouldn't do it if I were you in terms of trading the breakout on this range here, unless you really want to do it. You can have it below 151. At 151, that would be about okay. For the sell stop, the buy stop would actually be about 151.50. I wouldn't recommend this one because it's a little bit high in terms of range. Right, we have about 4 minutes, no rush. Now for gold, unfortunately, I can't do a 50-minute straddle on this one. I need to go with the hourly straddle, and that would mean, you know, having the buy stop above 2,300. That's a little bit too much, I'll be honest with you. The sell stop is actually going to be about about 22.65, right? It's a huge gap. We're talking about $40 of range here. Can you do it on a small time frame? You can. You can have a small sell stop here about 2280. About 2280, you can have a sell stop at about 2280. The buy stop will still be at 2306. So I got 2 sell stops and 1 buy stop. So we'll see what happens here. Remember to close your order once. If your buy stop gets triggered, you need to close your sell stop. Okay. For the Aussie USD, this one here, you can have the sell stop, buy stop a little bit higher, about 66.25. And the sell stop, you want to have it below 65.60. The range is a little bit huge on this one. You know, you might be thinking, why not have our buy stop here? It's too close to the market. In fact, market is already touching it right now, so it's a little bit risky. You can lower the buy stop at 66 if you want. Okay, that would limit the risk a little bit. Okay, and if you're wondering where's my stop loss, your buy stop loss is going to be your sell stop order. Your sell stop loss is going to be your buy stop order. Okay, I just don't have the time to put it in here right now. All right, news is going to get released in about 2 minutes time. We still have a little bit more time. The New Zealand USD, I'll probably skip that. The dollar Canadian, you can trade the dollar Canadian. I don't think we have a huge range on the dollar Canadian. Buy stop at 1.3580, sell stop a little bit lower, about 1.3550. Okay, buy stop for the dollar Canadian at 1.3580. Sell stop for the dollar Canadian is located at 1.3547. Okay. All right. And oil. Nearly forgot about oil. Oil, I think this is actually tradable. Your buy stop for oil is going to be about 86.75. You can have it at 86.75, and the sell stop you can have it about 85.75. So it is about a dollar range. 85.75 as your sell stop. Your buy stop is going to be at 86.75. All right. Well, Alvin, we're waiting for the breakout to happen. I don't know what's going to happen. Is it going to be the buy stop? Is it going to be the sell stop? But if you're paying attention, we haven't triggered any orders yet. All right. So let me just open it up. We don't have any orders done yet. My instinct told me it'll be like last month. Hopefully not. Hopefully not. Hopefully it'll be one way. Hopefully we don't have a lot of fluctuations going on in the market. Okay. So news is gonna get released anytime soon. But yeah. All right. So dollar yen, dollar CAD has been triggered for a buy, Euro USD for a sell. So I'm gonna clear off my Euro USD sell stop, Euro USD pound USD sell stop, and the dollar CAD dollar yen has been triggered. So dollar CAD dollar yen, I'm gonna close those, and everything else it's pretty much in line. We don't have any other orders yet. Let me read through the data. It comes in at 303,000. Previous number revised down to 270,000, so it's a huge gain, about 50% gain than the consensus. Unemployment rate has come down, 3.8%, so we should get a little bit more of a one-directional movement in the market. So yeah, pretty good. So far so good. But yeah, we're just waiting for the other orders as well. The Aussie USD I don't think is actually going to get triggered. But we'll see. Aussie USD is about to get triggered. Aussie USD buy stop is going to be closed right now. The sell stop has been triggered. Gold, we're not looking at that drop yet. Be very careful because gold's initial sell stop is actually going to be a little bit lower at 22.65. So be mindful of your positions. Oil, we do not have a breakout for oil, unfortunately. All right. So significant drop on the Euro USD, and I think this is probably still going to be in line with what we have here in terms of the trend line going in the market. And that's basically it. How far down can it go? We will be targeting a little bit lower, about 1.0775. It's going to give us a good risk reward ratio. Just about there for the Euro USD. For the Pound USD, we will aim a little bit lower. It's at 1.26 right now. We will go a little bit lower. We will go at about 1.2560, 1.2570 for the Pound USD. The dollar Japanese yen, we will go for that one. It's probably not going to hit 152, but we'll see what happens here. Because beyond 152 for the dollar Japanese yen, we could actually see a lot of a quick spike to the upside beyond 152 for the dollar Japanese yen. So we have dollar Canadian as well. The dollar Canadian obviously a lot higher right now. Dollar Canadian, we need to go for, we are actually surpassing the previous high for dollar Canadian. For the dollar Canadian, we can close our position right now. Pretty happy with the dollar Canadian. With the Pound USD, it's up to you what you want to do with that one. For the Aussie USD, I'm not liking the Aussie USD because it's kind of borderlining. This is actually going to be a little bit slow. Right, dollar Canadian, you can move your stop loss to break even right now if you want to stay in that trade. I just closed out the dollar Canadian. It might actually push a little bit higher, but we are at that 1.36 key level for dollar Canadian. So be very mindful on the dollar Canadian for now. Okay, so let me see if I can get that shift. Yeah, you can see that we are pretty much. Let me just clear that. For the dollar Canadian, we are at 1.36, and if we take a look at how far it can go in terms of previous high, that's about 1.38-ish. It's really very far. So I would be happy with the dollar Canadian right now. If you want to get out, feel free to get out. Okay? Good. So yeah, in terms of data, the other stuff that we're looking at, average hourly earnings has also gone up from... previous number was revised up from 0.1 to 0.2%. We got 0.3% month-on-month growth. But the yearly number, we saw a drop from 4.3% to 4.1%. Okay? All right. I think market is starting to slow down a little bit. Or is it my MT5 that's kind of slowing down a little bit? All right. Okay. Anyway. Yeah, we do have a little bit of support at 1.08 for the Euro USD. It will need to break below 1.08. So if you have your profits, take your profits out right now. And let me restart the MT5. I think we need to get out from the Euro USD right about now. It's not looking too good because we have that support at 1.08. It should push lower, but we might see a little bit of a fade that could potentially happen. The Pound USD does drop a lot more, and I think the Pound USD is already below 1.26. Not really a problem at this point in time because our trigger is at 1.2616 anyway. All right, gold. I don't think we are actually going to get any reactions on gold. It didn't get triggered. It's up to you what you want to do with gold, but I don't like trading gold at this level at this point in time because it's all-time high. We actually don't have a lot of strong evidence to trade short for gold. It is also very risky to buy gold at the current price level because it's an all-time high level, and there are limits to how far we can estimate in terms of how far gold can go. All right, so I will be canceling my gold orders, but going by the data that we have, much prefer a sell rather than a buy for gold. But I'm closing my gold orders because we haven't been triggered for gold and it's not going to go anywhere. And for XTI, we will close that trade as well. We don't have that pending orders. So these are the running trades that we have. But yeah, those are the numbers. The dollar Japanese yen is a little bit tough because we are looking at a potential intervention from the finance ministry in Japan, and obviously 152 is the key level. I don't think they will intervene at 152, but it would be a good idea if you have a dollar yen position that you should consider 152 as a strong key level to get out of your position. Okay. Can we hold our position, or there could be a whip? I don't think there will be a whip. I do not think there will be a whip. Could there be a fade? We might have a little bit of a fade. Let me just bring up my trading view. This is the EURUSD. This is on the early time frame. One of the key levels to watch out for is obviously 1.08. Okay, 1.08, it's going to be a key level. And if we take a look at where 1.08 is located, it's the base of the Ishimoku cloud itself. So we might see a little bit of a bounce. We might see a little bit of a profit taking at around 1.08. Okay, can it? What do we expect from this one here? What happens if it bounces off 1.08? Then we'll probably go back to range, very close to about 1.0830, 1.0840. If it does want to continue to go down, it might pull back before it has another run at 1.08. Okay, so in all honesty, you should be very careful with the EURUSD at 1.08. The pound USD, not really too concerned. We break 1.26, so I think we should be able to push down a little bit lower. And also, if we take a look at the rejection overnight, that's basically off the order block, pretty much at very close to 1.27, right? So we have that order block planned out since end of March. And that's basically where market got rejected overnight. So in terms of correction, I think we still have a little bit more room to go for the correction on the pound USD. Obviously, 61.8% is a little bit of a profit-taking level, but we are anticipating a little bit of a pull back lower towards 78.6% on the pound USD. That will place it about 1.2570, 1.2575 for the pound USD. Kind of easy day, not like last month. Yeah, you know, I'm glad the number is so high, but let's talk about the NFP numbers first. So the previous month's number, let me just bring it into view for you guys. So 270,000, this is actually revised down from last month, 275,000. Market is expecting 200,000. We got 303,000. That's, yeah, about 50% gain pretty much on the numbers itself. So that number beats last month's number. And as I said previously, I don't know if you guys attended some of the webinars that I've done this week. We were talking about a potential unemployment rate to come back down a little bit because I think last month's number was a little bit too high at 3.9%. So 3.8 is about right, and we're potentially gradually moving back to 3.7% on the numbers itself. Okay, so those are the numbers, and the numbers just come in strong. You should have a little bit of a one-directional movement, at least until about CPI numbers, which is going to be on Wednesday. All right, can I see Bitcoin? Yeah, sure. Let's talk about Bitcoin. Let's pull out Bitcoin. I don't think we had time for Bitcoin. I'm not sure how this is actually going to be impacted. I don't think it's much, yeah, in terms of the drop on Bitcoin. I don't think it's actually pretty significant. We're kind of in between for Bitcoin on the daily time frame, but for the hourly time frame, you need to be a little bit more careful around this area here. This could actually be a potential order blocks that you need to be watching out for. It kind of goes down to about 65,000 for Bitcoin. So if it bounces now, it will be bouncing off 66,000. But the worst case scenario, I think we could potentially see a little bit of a push lower towards 65,000. Is it a good time to short Bitcoin though? I don't really think that's a great idea, because if you do want to short Bitcoin, your minimum stop loss is going to be about 67,700. The logical stop loss will be about 69,309. Risk reward ratio just doesn't cut it. Even if you go for the shorter risk, you're not going to get a 1-to-1 risk reward ratio on Bitcoin. So just be mindful. If you already have a position, think about it. But if you're thinking of, collecting Bitcoin at a lower level, maybe look at about 65,000. But to jump in right now, probably not a great idea. I'll just be honest. Okay. Let's see if there's any potential fades that we see. Right now, we're still pushing a little bit lower. We are pushing. I think we're losing about 10 pips in terms of market movement here. So yeah, you might really want to consider the Aussie USD is not looking that great either. That's really pushing it. We had a strong bounce on the Aussie USD there. It should continue to push lower because we technically have broken the short-term trend line that we have here on the Aussie USD. We maintain a position below 66 cents, but this one here, it's up to you what you want to do with the Aussie USD. You're not going to get crazy good range on the Aussie USD, right? Dollar Japanese yen, if you're not comfortable with the dollar Japanese yen, please close your position. My warning for the dollar Japanese yen is pretty much as per outlook this Monday. The dollar Japanese yen, if you want to trade anything yen related, this is a high risk scenario because of the potential intervention that could happen from Japan, right? If Japan intervenes in one single day, you could actually look at 7 yen or 700 pips drop if they do intervene, up to about 1,000 pips drop, which is 10 yen. So you could actually blow up your account easily if you leverage it. So just be mindful. Yen pairs have a huge risk this week. Consider what you want to do with those yen pairs, okay? But be very careful. Any potential intervention that could actually be pretty ugly to your account, okay? So Euro USD, I think we're looking at a little bit of a bounce on the Euro USD. Should we do a fade? That's the thing, all right? Should we do it? I don't think it's a great idea to do the fade at this point in time. The RSI is still ticking to the downside. The 50 minutes time frame is technically still below the Ishimoku cloud, and we just got rejected at 1.0850, pretty much kind of the barrier that we have on the Euro USD, which is 1.0850, 1.09. From a technical standpoint and from a fundamental standpoint, I think it's a little bit risky to fade it, but we could add into our position. If you have not had a position yet on the Euro USD, you can actually set a limit order if you want to. Now, remember, we had this breakout here. So we're expecting market to kind of pull back to about 1.0830, right? So you can create a sell limit at 1.0830. If the market does push back up, then it could actually trigger your sell limit order, and that sell limit order, you can modify this and have your take profit at 1.0775, and in terms of your stop loss, you can have it at 1.0850. That should be enough, right? Those limit orders are basically in place for what it is tonight. I wouldn't go for a fade, not at the current price level. Even though it looks like it might have bounced 1.08, technically we have not even touched 1.08. So 1.08 is still about 5 pip-ish from the low. So we haven't touched 1.08, so it's a little bit too early to fade. If the market break 1.08 or actually go below 1.08, then yeah, I might do the fade on the logic for potential liquidity sweep. We're just not looking at that right now. So I'm more in line. If you haven't had a position yet, if it does pull back, then have the limit order a little bit higher. All right. So first 50 minutes is done. We'll see what happens here. If it continues to drop down, no way we can do the pullback, the fade. Although we need to put our consideration with the CPI number with today data, it should be impactful. Yes, it should be. But I'll be honest with you, in terms of FOMC, in terms of taking into account the labor market, it's not that important for the FOMC to consider what's going on in the labor market. So does it have a huge impact? I will probably say it will give the FOMC another reason if they have a high CPI next week. If on Wednesday the CPI inflation number it's higher, then the FOMC would probably say, look, you know, labor market is strong, unemployment is cool, the NFP numbers continue to grow, the hourly wage, average, the average hourly earnings. The average hourly earnings does go up from 0.1 that was revised up to 0.2 to 0.3%. They might use this to say, hey, you know what? We really need to see the inflation dropping down significantly before we can do a rate cut. So hawkish comments coming out from the FOMC overnight that, you know, pushes that risk off sentiment in the market. Yeah, we could see that scenario play out. So remember with one of the scenarios for the rate cut, we discussed this in some of the webinars that I did, especially during the FOMC economic projections. There might be a potential where in June, the FOMC does not cut interest rate, and they might actually keep interest rate at 5.5% and then announce that, you know what, we're not cutting in June. Potentially, we will cut about 2 times for the rest of 2024. So in the second half of 2024, they might do 2 interest rate cuts instead of 3. So that scenario could actually play out for the FOMC. Okay. All right. So yeah, not good. The fade, I don't think we can get a fade at this point in time. The EURUSD is continuing to push lower. You could get out at 1.08 if you let's see what happens here. If market touches 1.08 and we see the market bouncing back up above 1.0815, I think we need to close your EURUSD. If you want to secure some profits or you want to live it, if you really want to live it, you can target 1.0775 as a potential target level. You can go lower if you want to, but I think 1.0775 is an okay level. All right. So with the stop loss, what should we do with the stop loss? If you want to leave your trade, then you want to have your stop loss at 1.0850. Okay, right about the stop loss of the sell limit that we have here. So for the pound USD, in terms of the stop loss, you can move it just about 1.2650. Okay, that means our risk reward ratio is actually 1 to 2 for the pound USD. You can leave it there. The dollar Japanese yen, this is a little bit problematic because we're only aiming for 152, so your stop loss can't be at 150.75. You can have your stop loss at about 151.25. Okay, if you want to trade intraday, take a profit at 152, feel free to have your stop loss at 151.25. It is still going to be a huge stop loss. It is about 50 pips of stop loss, but you will need a stop loss if you're trading the dollar Japanese yen. All right, gold, we're not going anywhere. Remember, our stop loss orders was actually about 22.75. This hasn't been triggered as of yet, so no go on gold, unfortunately. You know, in all good conscience, you know, we're at the level where it's actually a little bit tough. If you do want to have a short position in gold, then your stop loss need to be at about 22.95, which is very close to the high at about 2300. So think about it very carefully. Your risk reward ratio, it's, you know, it depends where you want to aim it for. If you just want to jump in for a short trade, this is on a 50 minutes chart, by the way, because if I were to go on to the hourly time frame, we are technically still within range of this here. So yeah, we are actually trading within the range on gold. So that's the reason why I just close out my gold positions. All right, let's take a look at some of the crosses. What's my thought on the Aussie New Zealand? Not much. I'll be honest with you. Aussie New Zealand, the gain is actually not that significant. Let me look at it from the hourly time frame. the crosses shouldn't be affected much. Where's the Aussie New Zealand? There we go. All right, so this is on the early time frame. We're kind of hovering 1.0930, 1.0950. It's still within a 20 pip range. I wouldn't say this is a great breakout, but whether or not you want to short the Aussie New Zealand, I probably wouldn't short the Aussie. Technically, we are maintained by a good channel that we have here. So we're still in this channel here, so we're likely going to be trading in that channel, but you know, is it going to be like anything significant? Probably not. The range is so small, it's not really my cup of tea. Potential targets for the Aussie New Zealand here, I think we did the fib for this one. Oh, that's outdated fib. But yeah, if we do the last fib, we are beyond 200%. This would be the proper swing. Probably going to be going about 1.10. But this is probably going to be a slow grind. We're looking at this on the daily time frame. So probably not something that I would actually trade. With this data, would NASDAQ go down? It should not, right? I mean, uncut rate should make stock down. Uncut rate? Uncut rate? What do you mean by uncut rate? Do you want me to cut the rate or not cut the rate? All right. I'll try and take a look at NASDAQ here. Should it go down? I don't think we kind of peaked out a little bit. I think we just take a look at this one here. We're still being capped by 18,000 on NASDAQ here. Probably the key level to watch out for is 18,000. What's my aim on pound? On pound, the aim for pound, it's going to be at 1.2565, 1.2565, 1.2575. Those are going to be good levels for the pound USD. It's not much, I'll just be honest with you. I mean, we're looking at a huge drop in the market, but it's only basically just about 27 pips. It's not much, I'll just be honest with you. NASDAQ, we're facing a little bit of resistance at 18,000. I don't know if the US market is going to open above 18,000. We'll see what happens. If it punches through above 18,000, then I think the stock market would be okay. We might see a little bit of a recovery from last night. The drop last night was so significant, it's crazy, right? So once we break 18,000, we'll break above 23.6%. Then we could actually track a little bit higher, potentially towards 50% there, about 18,100, 18,100, right? We can probably climb towards 18,100, but we need an hourly close above 18,000. So if we do have at least an hourly close above 18,000, then yeah, you can go for that 50%. I think it's going to give you about, so I'm assuming if there's a close above 18,000, your stop loss is going to be about 138 points. Your potential target is about 116, 100 to 120 points. It's not going to be a one-to-one risk-reward ratio, but if you consider the spike that happened on NASDAQ, that's the stop loss. You know, it's up to you what do you want to do with this one here. I do expect a little bit of a recovery from last night's sell-off, but we'll see what happens. Market could react, you know, if the market wants to react negatively, it could, right? It could potentially even crash even lower. If it doesn't surpass 18,000, we could actually see more drops on the NASDAQ 100 here, because the assumption last night was the drop was on the back of a more hawkish comments from the Fed, you know, and the labor data kind of backs it up a little bit that the US economy is actually really strong. So really depends. I wouldn't open a position right now. I would wait until we clear off 18,000 or we actually fail at 18,000, then make your decision if you want to be trading NASDAQ tonight. All right. What's my aim on the pound USD? I think we already answered that. Yeah, it's not much, but 1.2575 to 1.2565, about that 78.6%. Where this cluster is, that's basically what we are aiming for on the pound USD. So right about now, if you want to get out, it's also fine. It really depends what's the reaction there about 1.2575. I mean, higher rate for a longer time, twice cut rates this year compared to expectation, 3 times. I think it's pretty much priced into the market overnight. I'll just be honest with you. The sterling yen, what can we do with the sterling yen? Well, the thing with the sterling yen, I'm still in for, you know, obviously I'm still looking at further gains on the sterling yen. If the dollar yen does break above 152, but considering this, we might actually be forming a little bit of a sharp flag here. So really depends. If it does break 191, then we might actually drop down a little bit lower towards 190.50. Is it going to give you a good risk-reward ratio? I think you're going to get about 1-to-1 risk-reward ratio. But for now, the other scenario is we could actually see sterling yen maintain a position above 191 and potentially try to push a little bit higher. But the current formation here is that we're looking at a little bit of a flag, a bearish flag on the sterling yen. Obviously, it needs a little bit of confirmation. We need to break the flag. So not much you can do right now. And again, as I mentioned, trading the yen, whether you want to short, you want to go long, or you want to go short, yen crosses, the risk go both way. Okay, if you short the sterling yen, for example, and the dollar yen breaks 152, make a run towards 153, you could actually see the sterling yen gain all the way back up to 192, 193 again. So it is going to be risky. Both sides is going to be risky on any yen crosses. So if you're not experienced, and if you're new to trading, I would implore you to be very mindful if you want to trade anything yen related. This is a special case that we will continue to monitor. But yeah, the risk of intervention is high on all yen crosses. Okay? Cool. All right. All right, we saw that. We didn't get a fade. So yeah, let's summarize the NFP trading strategies. Yeah, I'll leave this. Feel free if you want to close it. I think we already add up enough for tonight. I think we already secured about 50, 60 pips for tonight, which is plenty enough for news trading. So again, NFP trading strategies in summary. There are 3 main strategies traders use to trade the news. A strategy based on 2 pending order settings, the one we just did, the Stradle, and this is something that we do every single month. You can trade before the data is released. I wouldn't do that because there's a lot of assumptions, a lot of speculation. You can trade after the data is released. I just gave you the information that the number is surprisingly strong. We don't have any mixed numbers. We have a strong NFP. We have a lower unemployment rate. We have a higher average hourly earnings per month. All 3 indicates a strong labor market in the US. It should be beneficial for the US dollar in the long run. Obviously, traders are going to start saying, hey, you know what? I'll wait for these CPI numbers and whatnot. But no denying the numbers that we have here. It's a really good number. Okay, so for more effective trading, you can actually combine the strategies. I would combine the strategy based on 2 pending order settings. I would also use the limit order on the EURUSD as well, you know, just in case it does pull back. Instead of buying it and do the fade, I wouldn't do the fade right now. I would actually wait at a higher price level and attempt a short on the EURUSD. All right, so again, the code for tonight is Nonfarm 2024. So make sure you are using this code if you're depositing into your Octa trading account. The code again is Nonfarm 2024, valid until the 31st of December 2024. Okay, so this is for a 100% deposit bonus or double your deposit using the promo code Nonfarm 2024. Okay. All right, I think we are about on time. Already answered some of the questions here. So what's next? We will cover the news trading theory and practice. This will be on Monday. If you want to know more about the pending orders that we will be using for any news trading, please join me on Monday. You know, I'll be honest with you, on NFP and CPI news release, we got a lot more people watching, but during the theory and practice, not a lot of people are attending it, and then, you know, everyone got confused with the pending orders. If you're new, I would say please come in and we'll go through some of the pending orders, when to use them, how to use them, okay? And we also talk about the risks in terms of news trading. So that will be on Monday, which is our second session on news trading, which is the theory and practice. All right, cool. With that, have a great, fantastic weekend. And stay safe, manage your risk, and I'll see you on Monday. Cool. Thank you.